joining us now to discuss is we've got Matt Weller. He's the global head of research at Forex.com. Matt, welcome to the show. So we're seeing Bitcoin is lower, but still pretty steady amid rate hikes in the UK, Switzerland, and the United States. So is the slide already priced in?
I think traders have been catching up to the central banks and their aggressive tightening really across the board. We've seen all of the major central banks raising interest rates and, crucially, raising interest rates in unison more aggressively than the market was expecting. And we just saw with the Fed meeting yesterday that the Fed is still looking at raising interest rates by about another 125 basis points over its last two meetings of this year. And that creates really just almost like a black hole for liquidity, sucking up all of the money that's been flowing around really for the entirety of the crypto asset lifespan that we've seen, at least in modern days. So I think this is a big theme, something that will continue to serve as a headwind for Bitcoin and other crypto assets, probably for at least a couple of months until traders can see a light at the end of the tunnel and central banks at least slowing down on those rate hikes.
All right, so one of my favorite questions as of late is like, are we in a recession? Because I always get a different answer. And are we in a crypto winter? And if so, when will we see the light at the end of the tunnel and the central bank pivot?
I think the soonest we could see that is around November. That's when the Fed's next meeting is. Traders are currently pricing in another 75 basis point hike from the Fed. That's also notably when we'll be going into winter, and a lot of traders are concerned about cooling temperatures and the impact that will have, especially on the European continent as energy use goes up. And we've seen those energy prices skyrocketing, especially in Europe. So I think that's where the ECB, the Bank of England, and the Fed might all start to tap the brakes at the same time. And that could certainly be a tailwind, or at least a bullish narrative for crypto assets, because clearly we're in a crypto winter. And the question is whether we'll be able to get out of that crypto winter when we enter the calendar winter this year.
So I guess another important question that is on people's minds is, when will we see a bottom in Bitcoin? What level is it at?
There's at least an outside chance that we have seen a bottom. I'm skeptical of that view. If we just look historically, Bitcoin has typically fallen about 80% from its prior highs in each of its bear markets. So far, we've only fallen about 75% in this bear market. We are seeing Bitcoin become more institutionalized, in some ways de-risked. I think it's pretty unlikely that Bitcoin's going to go away, whereas that was an active question back in 2013. And I'm looking at a couple of other indicators that suggest we're probably not quite at a bottom yet, but we could be soon. One of the indicators I'm tracking closely, but I just wanted to put a pin on this, is what's called the Mayer multipolar. It essentially compares the price of Bitcoin to its 200-day moving average. That indicator fell to 0.6, or indicating the price of Bitcoin is 60% of the price of its 200-day moving average. Historically, that's right about where we bottomed. And the other indicator I'm watching, I think I brought a chart for this one, is a mouthful. It's the MVRVZ score. But essentially what it measures is the realized price of Bitcoin that has been moved relative to the market cap of Bitcoin. And as you can see on this chart, the lower panel, that orange line, it has fallen. It hasn't reached as low as we have in prior bear markets, but as Bitcoin becomes more institutionalized, as it becomes de-risked in that way, there's at least an argument that we might not fall that low. So I would say somewhere in the mid-teens, if we do break this low in Bitcoin, is where we could start to see a bottom. And again, I think that's something we could start to see maybe midway through Q4 or toward the end of the year.
Okay, so we're also seeing Ethereum take a bigger hit than Bitcoin, and I wonder why. We just had this Ethereum merge. It went off without a hitch, and apparently it's not doing so well.
No, at least in the short term. And I think that's a function of inflated expectations. A lot of traders heard about the merge. They crowded in, especially on the retail side, relatively unsophisticated traders trying to get ahead of a pump. When that pump failed to emerge, they all sold in mass. And we've also seen Ethereum miners who have now been made essentially obsolete are winding down their operations, and they've been dumping Ethereum aggressively because there's really no point to holding it anymore. It's not a part of their business. So at least in the short term, I think those are headwinds for Ethereum relative to Bitcoin. But over the longer term, I do think between the environmental narrative with Ethereum's energy consumption falling 99.98%, and the supply inflation narrative for Ethereum, which this chart shows, the annualized post-merge inflation rate of Ethereum is well below that of Bitcoin. So I think those types of narratives may start to kick in over the longer term and could benefit Ethereum. But at least in the short term, we're seeing a pretty aggressive buy the rumor, sell the news reaction on the merge. And I don't think that's done yet.